In less than 24 hours, a massive event will happen, the Bitcoin halving, an event that usually precedes a quite nice price rally. Let's have a look at the data. Let's look at prior halvings. Let's have a look at how much further Bitcoin can rise from here. Now here's the countdown. I will put a link down below. We are less than 20 hours away from the halving event. And here is what historically happened after a halving. We are going to enter the fifth cycle. So this is the Bitcoin price chart starting after every halving. And we will start the fifth season in less than 24 hours. Usually a few days after the halving, not much happened historically, but then 1 or 2 months afterwards, we simply continued climbing massively. Now there is a slight difference this time. This time we've already seen a rally pre-halving. This is not something that we had observed in the past. Have a look at this. This is the Bitcoin rainbow chart. It's a very long-term Bitcoin price chart here in black. And then we've got some regressions with buffers to the upper and lower side that tend to encompass the price movements quite well. And here the vertical lines, those are the halving events. Usually the price action prior to the halving was rather muted and the price tended to be rather on the lower end. Then post-halving we went up quite a lot, but this time we are already somewhat elevated. We are not at those blue areas, we are already in the light green and yellow. So there is a slight difference. The upper band is at $280,000, $290,000, but note how this might potentially overestimate because in the last bull run, we didn't hit that upper ceiling. So maybe this time we will max out already in the light orange, maybe at 100K, maybe at 110K. This is what I expect to be the most likely scenario. I don't think that we will go close to the 300K in this bull run. Now, I think this Bitcoin halving is actually a non-event. I don't think it's that important as people make it out to be. Yes, there might be a self-fulfilling prophecy effect, as in people might expect that the price will rise, thus nobody is selling, thus some people are buying, and because of that the price rises. Not because of the halving itself, not because the new additional supply that hits the market gets cut in half, not because of that direct impact by the supply reduction, but rather because people buy in anticipation of a rally as it has happened in the past. But when we just look at the pure supply shift, it's not that much of a difference. Bitcoin's inflation is currently at 1.7%, and this is the number that will be cut in half. So we see Bitcoin's inflation rate over here. We also see the halving events. Last time we went from 3.4 to now 1.7%. So really the delta will only be 0.85% per annum. This is not really pushing the price that much. There are way more important drivers. Bitcoin is not anymore driven by the supply. Bitcoin is only driven by the demand. And one of the main drivers for demand is of course the Bitcoin ETF, or should I rather say it was the Bitcoin ETF. This is the number of Bitcoins that is being held by various ETFs, including the Grayscale Bitcoin Trust. And yes, this went up quite nicely, but only up until the middle of March. Since then, we are going pretty much sideways. Since then, there is no net purchases. They're simply just funds that get transferred from the Grayscale Bitcoin Trust to those other vehicles at the moment in the last month. Have a look at the net ETF flows. It's not clearly positive anymore in the last month. Sometimes there are inflows, sometimes there are outflows. At the beginning, the annualized demand for Bitcoin through those ETFs was roughly 9%. 9% of all of Bitcoin supply was scooped up by the ETFs. Right now, that's pretty much zero. But there we can see how fluctuating those demand curves are. And that's really what's causing the massive ups and downs in the Bitcoin price. A more important effect than the halving is actually how much Bitcoin gets lost every year. Because have a look at those hodl waves. What we see over here is the percentage of Bitcoin that hasn't moved for at least 5 years. And yes, sometimes some people might be moving their Bitcoin after 5 years, but the vast majority of Bitcoin doesn't move after 5 years anymore. And again, this is not the number of Bitcoin, this is the percentage of all of circulating Bitcoin. So this went from say 20% to currently a bit over 30% in the span of roughly 6 years. So that's pretty much the entire Bitcoin mining reward right now. So already Bitcoin isn't inflationary because all of the Bitcoin that currently gets mined also gets lost. Of course, not the exact same Bitcoin, but at the same rate. So there's no net expansion of the floating Bitcoin. With the halving, the number of Bitcoin that's floating around will be shrinking over time. Now, when we do the cutoff at the Bitcoin that haven't moved for at least 3 years, we see way more how people are actually riding those waves, right? This sometimes goes down. Over time, of course, there's more and more adoption by long-term holders, but still it's unreasonable to say that most of those Bitcoin are lost. The 5-year cutoff seems to make much more sense. And so what does this mean? It means that you have to be very careful not to be part of those people that lose their Bitcoin. There's various ways to lose your Bitcoin, right? You might either get hacked on a centralized exchange, you might self-custody your wallet, but you might not properly store your seed phrase. Make sure you do this right. Make sure you've got a hardware wallet where you store your Bitcoin, and make sure that you've got the seed phrase at 2 independent places somewhere, so that in case you lose it in one place, you still have it somewhere else. Make sure you don't store your seed phrase on digital devices, right? Don't make pictures of the seed phrase. Don't write it in a computer somewhere. Simply write it on plain paper and store it in 2 places. The big question is, who is going to buy Bitcoin after the halving? That's the main driver. The demand is the main driver. And I believe looking very closely at the Bitcoin ETF balances is a key to that. If you can see clearly net inflows again into Bitcoin through those ETFs, then the price has no other direction but to go up. But until that's confirmed, I stay personally somewhat cautious. I have taken quite a bit of profit in the last month, and I've got quite a bit of capital on the sidelines ready to be deployed in case we do see a price drop from here, which I believe isn't that unlikely. If it's the first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. Feel free to join us. Link is down below.